All right, so let's take a look to see what's happening in the markets today. And today is Friday, June 25th, and we have a lot going on, right, Mark? I mean, we have
We do.
President's Biden infrastructure package. We have the bank stress test. We have earnings from Nike, Carmax, Blackberry. We have news from Virgin Galactic. We have the Russell 3000 index rebalancing. And this morning, the Fed's favorite indicator, the inflation indicator, has been released. Okay, so let's jump right in and look at the markets. I mean, yesterday, wow, new record highs again, huh?
Yeah, S&P and NASDAQ both made new record highs, up nicely, and the Dow still trails a little bit, so those blue chip stocks trailing, but yesterday led the way, up 1% for the day.
Yeah, absolutely. And this morning, when we look at the pre-market, I mean, the Dow is still leading the way. I mean, lagging, but it's trying to catch up here because this morning it's up in the futures markets 0.4%, the S only 0.15%, and the Nasdaq 0.16%. So, all right. So, and with the Nasdaq making new all-time highs, Kathy Woods, what is it? ARK, Innovation ETF, had a good day yesterday and now is positive for the year. So she has had a little bit rougher year. So there's a weekly
Yeah.
chart here. But now, after being up 1.5% yesterday, also up. So still a little bit trailing here, the indices.
Yeah. Took some heat a couple of weeks ago, or more like a month or two ago, but seems to be doing well.
All right. So let's talk about the infrastructure deal. Did you see this that was announced
Yeah,
yesterday?
yeah. It looks like there was a bipartisan deal that will cost about $1.2 trillion over 8 years, with $579 billion in new spending.
Yeah, and
So
I mean, infrastructure, and this is where Caterpillar says, "Oh, wait, what infrastructure? Okay, we have heavy machinery here." So yesterday, Caterpillar up 2.6%. This morning, being up another percent. So they are definitely very excited about all this infrastructure stuff. So,
bring out the heavy machinery.
bring it out, bring it out. Okay, then we got to talk about banks. So yesterday, the Fed announced the stress test results. So what's happening there?
Yeah, and we talked a little bit about it yesterday with the Fed monitoring the stress test there. There was a close eye on it, just because if the banks did pass the stress test, then they could lift some of the pandemic era, um, you know, uh, curbs that they put on, and that's exactly what happened. So all 23 banks, they passed the stress test, so they are now allowed to offer dividends and stock buybacks, two things that they weren't allowed to do during the pandemic.
Right. And just to put it in perspective, so this stress test, what this is all about is it's testing how well would banks do in a severe recession. And this is the aftermath of 2008, right?
Yeah.
So annually now, it's because we know in 2008, several of the big banks failed and needed bailouts. And this is where the stress test was implemented. And right now there's 23 institutions in there. And so they're testing, okay, if we would go into a severe recession, will the banks survive? And yes, they did. And as a result, yesterday, Bank of America up 1.5%. This morning, up another 1%. Let's take a look at Wells Fargo. So Wells Fargo also up 2.78% yesterday. This morning, up another 1.6%. Citi was up yesterday 2.5%, 2.4%. This morning, up 0.8%. So, I mean, banks just ripping all across because now, as you said, they can get rid of some of the restrictions that were put on them and raise dividends, buy back more stock, and do all the good stuff that banks want to do. So,
Yep. Did you see SPCE?
my gosh, yes. So, I mean, who would have known? Let's switch to a weekly chart just to put it a little bit in perspective. So SPCE, Virgin Galactic, was soaring high at some point to $60. And again, this is a weekly chart, so we're looking at around February 2021. And then from there, from $60, crashed all the way down to around $15, right? I think $15, $16. and now staging a comeback. This morning, up 20%. So what's happening there, Mark?
Yeah, the FAA granted Virgin Galactic approval to fly paying customers to space. So first time ever, big news,
That's the other
and
thing.
traders are liking
It's
it.
the first time ever that the FAA grants such approval. I was wondering where in their handbook. So if somebody applies, I mean, FAA is the Federal Aviation Agency, right? So they're handling pretty much all planes. And recently, they also were forced to, well, deal with the drones, right, and flight patterns. And now, okay, well, flying into space. It's not NASA, it's the FAA here. Anyhow, super
Yeah,
interesting.
you
Yeah.
know that there are some guys sitting at the FAA going, "Shoot, we have to work on that book
We need
again."
to rewrite the manual, that's for sure. Okay. And then we had some earnings today.
Yeah, and I mean, this one was huge. Look at Nike. So the ticker NKE. I I mean, Nike is just blown all of its last 2 months of trading out of the water. It's trading at record highs now. They reported 93 cents earnings per share above a 51-cent estimate. They had a revenue beat. They exceeded 12 billion in revenue for the first time ever. They saw a 73% jump in direct sales through its app and websites, and it sounds like they expect this to continue.
Yeah, and
So
I mean,
looking,
it's hard to see. Up here, this is where we'll open, where I have the arrow. All
yeah,
the way up here. This is where we'll open. So is this, let me just switch to a weekly chart. Is this a new all-time high for Nike?
I'm
Oh,
pretty
I am
sure.
on a weekly chart. Holy cannoli. This is a
Yeah,
daily chart. Okay, so here on a weekly chart, it sure looks like, yep, looks like a new all-time high for Nike.
yep,
Wow. Yeah. They blew it out of the water.
yep.
Okay.
FedEx reported earnings too, but not the same result.
Yeah, FDX is the ticker. Yeah, that didn't look quite too good.
Yeah, so FedEx, they beat their earnings estimate by 2 cents. The revenue was better, but they say that operations are being hurt by not having enough workers, and that they will need to increase spending by 22% to offset delivery delays. And they say that this is something that could go into 2022. So basically, revenue in 2022 could be impacted by delays and labor shortages.
Yeah, and I mean, this is the story right now because we talked about it yesterday. Yesterday, initial unemployment claims higher than expected.
Yeah.
And then we have companies saying left and right, we need workers. We can't get workers. And I mean, this does not add up. This just doesn't add up that unemployment here claims are ticking higher and every company is willing to hire. And I said, at a premium, they're willing to pay a premium for this. So, do you think it's still because of the federal benefits that you have for being unemployed?
I think that's a huge driver. But I think there's two things too. One, some people are afraid to go back to the workforce, and some people like staying at home, right? If you think you need a paycheck to survive, and then all of a sudden you're not working for a year, you're like, yeah, this is pretty fun playing Xbox on my sofa. Maybe there's just not that drive yet, which is unfortunate,
Yeah.
because I think there's something to be said for hard work. But of course, there's the added unemployment bonus there that's definitely driving it, but it could be just psychologically a lot more than that.
Yeah, we'll see. So this morning also, the Fed's favorite inflation indicator has been released.
Yeah.
And this is the core PCE price index. Let's talk about this, Mark.
Yeah, so the index was up 5% in May, which was slightly below the 0.6% estimate, but it was the fastest increase since the early 90s. And this measures the change in the price of goods and services purchased by consumers. So it was a pretty big increase, all things considered, but slightly in line with what was expected, even though it was big.
Yeah, I mean, expected was that it rises 0.6% and it only did 0.5% month over month. And this is kind of what the markets wanted to hear this morning. I just want to switch over to a 5-minute chart on the S&P. So let's just switch back to, these are the S&P futures, and they had a a big jump higher on the news, because we know that inflation is the one thing that everybody is concerned about. The Fed keeps saying, especially Fed Chief Powell, it's transitory. And thus far, over the past few months, we just have seen the inflation numbers coming in higher and higher than expected. So therefore, this morning, when we finally see a number that is coming in, holy moly, there we go, that is coming in a little bit lower than expected. And I mean, at this point, it didn't really matter that it came in a little bit lower. It just was important that it didn't came in higher than expected. Exactly. That was the important thing. And this is where it seems that the stock market is on its way of the best week since April. Boy, what a difference a week makes, right? I mean, last week, the Dow had the worst week since last October in 9 months. And it seems that this week, the indices have the best week since April. I mean, wow. Talk about being bipolar.
Hey, Carmax was another company that reported earnings. Ticker is KMX.
Yep.
And they reported better than expected earnings with a 138 increase in Q1 revenue. So really, I guess, helped out by more vehicles being bought and the demand in the car market.
Well, the used car market, and then also that used car prices are higher, right? I mean, that probably helps them out. So interesting. All right. Any other stocks on your radar this morning?
Well, I hate to say it, but BlackBerry. BB. Yeah. They reported a smaller than expected loss and better revenue, down a little bit.
Yeah, I mean, it's one of the meme stocks, and this is where almost fundamentals, do they really play a role here? Or is it more like how often are you being mentioned on the Reddit forums, right?
Exactly.
And, are you right now a target of the Reddit crowd buying it or selling it and moving on to other stocks? Yeah, so this is where it's interesting. I mean, fundamentals, even technical analysis is out of the window with these stocks. And that's why, whatever. Okay, hey, we have one other huge, big event today. Do you know what it is?
Especially related to Ride, and that's the rebalancing of the Russell 3000.
The rebalancing of the Russell 3000. So stocks are being added to the index, and then also stocks are being deleted from the index. So a few notable ones that are being added is, for example, DraftKings, right? And we talked about this recently. And yes, Ride is being added to the Russell. Now, this rebalancing happens only once a year, and this is why usually it is a big deal for stocks like DraftKings or Russell, because there are several hedge funds and ETFs that are mirroring the Russell. And in order to mirror it, this is where these hedge funds have to buy the shares of the stocks that are being added to the Russell. So usually, in general, it means that once you're being added to an index, it's usually pretty good for a stock, right, Mark, wouldn't you say?
Yeah. And I mean, that rebalancing could take place once it's announced, so it doesn't necessarily mean there's here's the day, here's the jump, but you're right. It would typically be a bullish sign to be added to a major index. Russell 3000, not as major as the Russell 1000 or the S&P, of course, but it's big news for those companies, and we'll see if it has an impact on prices.
Yeah, I mean, this morning thus far, not much going on in Ride. So yesterday we were down 1.8%. This morning, up 0.8%. And when we say 1.8%, for this stock, this is nothing. I mean, this easily moves 8 to 10% a day. I mean, no doubt about this. Hey, I wanted to show you something since we were talking about Ride. Debbie got me a shirt, made a custom shirt for me. Let me show you. How do you like it? I'm loving it. So about our Ride trade, since we are stuck in this Ride trade here. Hey, let's end on a good note. So here we go. Okay. Have a great rest of your day. Have a fantastic weekend. If you like this, give us a like on your way out. Okay, we'll see you on Monday.
Happy trading, everybody.